I'm probably the only person online that will tell you this. So here's another golden nugget. This is what actually happens whenever you try to get a loan. That's the stuff that matters the most. And it's like super important that you have it in your underwriting. Who is buying this deal? How the world you make money. That's what a syndication is. These coaching programs suck because they only target people with no money. There's no investors in the group that actually have money to do deals with. We have everybody. It's like the people with money, the people with experience, and then the new people. If you're new, go figure out how you can provide value, because this business can and will change your life. We're going to be using, I don't know if you guys can see this deal right here. We are currently under contract on a $10 million deal. It's a 68 unit acquisition based out of Ocala, Florida. We are under contract and we are oversubscribed on the equity. I'm raising $4.5 million of investors' capital, and we're partnering with them, and we filled it up in 10 days. Super excited. And I'm going to be sharing the entire process, how we found it. I'm going to be walking you through deal flow. I'll walk you through the underwriting, the basic underwriting, and the advanced underwriting. My goal is to make it one of the most valuable events that you've attended, whether it's free or paid. I'm just going to jump in. We'll have a bunch of fun. You guys want to see what deal flow looks like in multifamily? Today's a very tough environment to do deals. This is our deal tracking sheet. We're not big enough to be a whole CRM yet. We still do Google Sheets. We are under contract on a 68 unit deal right this second. We've looked at over 100 deals, and we have it broken out from deals that are in the review, deals that are in underwriting. We're not that active on submitting new offers right now because we're about to close on a $10 million deal. LOIs going out. Passed on deals. These are like bad location, bad story, something behind the bones that we don't like. Look how many deals come into the pipeline and never even make it out into underwriting or submitting an offer. And then these are the deals that we've lost. And this is all just this year overall. And once we close in September, we will have one deal closed, 68 units for $10 million. It took us $1.6 billion to land on one $10 million deal. I don't want to scare you guys or tell you it's impossible. And keep in mind, this is for like larger private equity syndication stuff. So it's a much different thing than you'll be doing at the very beginning. If you're fairly new, you're going to start with small deals. I wanted to make it as real and as authentic as possible using this current deal that we're under contract on. So it's going to be both educational, and I believe in showing and not telling. That's the best way to teach, in my opinion. Just like go do it, I'll watch it, and see you do it, and then like I'll learn. This is the initial itinerary. Day one, we're going to be doing acquisitions. We're going to be going through deal flow. I'll talk about on-market, off-market, at least for multifamily. Underwriting, both the advanced and basic. And then the biggest thing, this is the act of taking action in multifamily. Like whenever we talk to a new investor, the very first thing we ask are you already submitting offers? If no, we got something going on. If yes, then let's roll. You need more people. That's like the bullet point for everybody. If you're taking action, you can do a deal. If you never submit an offer, you're never going to do a deal. This is the game plan for today. We're going to do a quick multifamily overview, just strategy and how to make money. How to source multifamily deals, talk to brokers. If we have any deal examples, you guys want me to call the broker live, I have no problem doing it. I love to talk to brokers. We talk to a bunch of them. We'll also go into underwriting, basic and advanced, and submitting LOIs. And again, for me, I'm a big show, don't tell. So like everything that we're going to be looking at, here's a PSA for $10 million. Here's an LOI. Everything is real. It's real time, proof, document. I'm not making up hypothetical examples. I want you guys to see the real side. The first question you have to ask is, are you going to be an active investor or are you going to be a passive investor? This is really big to delineate too. If you have no money, you can't be the passive investor. I'll just tell you right now. Like, it's okay. Again, it's okay if you don't have a tremendous amount of liquidity. You fit in the business. You just need to figure out where you fit into the business. If you do have liquidity, let's say you're a W-2 employee, you love your job, you can see yourself working there for the next 5 to 10 years, and you're consistently earning money, and you can invest it, and you don't want to learn how to deal with evictions and tenants and termites and toilets and underwriting and all the BS that comes with being an active general partner, then you might consider going passive. You really need to figure out where you fit. It will matter a lot. So bucket number one, new/small multifamily deals. This is if you're active. If you're gonna go take the at-bats and submit the offers and do everything, and you don't have a tremendous amount of money, or maybe you're just getting started, you're a flipper, you're a wholesaler, and you have 50 grand and you're looking to transition into bigger deals to make more money, you're going to start right here in the new to small multifamilies. This is 5 to 20 units. 5 to 20 units is a small multifamily transaction. This is where it's the most probable to actually do a deal, and in the quickest period of time, physically, to renovate 5 units, it does not take a long time. To physically renovate 68 units, it takes a long time. So you can relatively flip it in a quick period of time so you can pick up a good profit. I call these the adult flips. These are sub $2 million transactions. These are most likely going to be a joint venture or a partnership where it's just me and one other or 2 other people. You go out, you find the deal. Let's say you're a flipper, you're running a flipping company right now, you flip 5 homes or 10 homes a year, maybe you develop. Cool, and you want to move into value add or maybe even build new multifamily, it's okay, it's the same thing. We just move up. Let's go do a $2 million deal. You find it, you learn how to underwrite and like know it's a fucking great deal, and then you go partner with one investor for 250 grand or 500 grand. It's really not that crazy to find 250 to 500 grand. I am willing to bet a decent amount of money that somebody on this call has the liquidity of 250 to 500, probably even $1 million plus. I know for sure there are players here. This is a highly probable. Why do I say you should probably start here? If you're new and you've never done a deal before and you're trying to get started in multifamily as an active person, you could go try to start with a 200 unit big syndication and try to raise capital. And then you have people that do like 50 units to 100, and then you have small deals. The probability of you actually finding, closing, and making the actual money that you want to make is so much greater on small deals, at least at the beginning, because you keep more ownership and you make more money. The next break point, as you're going up, let's say you start here and you move up. You do one deal and you're like, I'm the freaking king of the world, let's go buy another one. I promise you that will happen, just so you know. You can never go smaller. The next one is the 20 to 60 unit mark. I market by purchase price, which is 2 to 6 million. This is a smaller syndication. $6 million is going to require $2 million of equity. That's a relatively larger size if you're new. And a $2 million deal is going to require 500 grand. On the top end of the small deals to the next top end. This one, you absolutely need a network. You might be able to do the small deals alone and just like raise debt and like just stay alone. You could. It's a lot easier if you have a network already. But as you move up, the probability, deal size, the probability goes down because it just gets harder and harder and harder to find these types of people that want to partner with you. You absolutely need a network. 5 out of 10 difficulty level. I just made it up. 10 out of 10 is like impossible. 1 is like pretty easy. This is a 5 out of 10. Pretty tough, but very achievable if you're extremely committed and you don't quit. The next one, we're going to keep moving up. This is where we're currently at as a firm. We started with relatively small. Now we're kind of gearing towards operations, so we're in control of the deals that we're doing and we own more of it because we can raise the capital. We're focused on 60 to 150 unit deals. This is full out syndication, family office, high net worth individual. You're no longer playing with like the flippers and the wholesalers. This is private equity firms. This is like the single A. So here. There's a line. Small deals and then 2 to 60 is like little league in comparison to where we're about to end, the institutional world. And this right here is like the single A portion of it, and you're about to move up to the institution world. You can make a lot of money on these deals. It is 9 out of 10 hard. If you're new, it's a very, very, very hard thing to do. A 100 unit deal in control without getting taken advantage of. Maybe, we'll see. But you can make a bunch of money. Like the $10 million deal that we're gonna do, there's a $150,000 acquisition fee. The asset management fees and the cash flow net to us are gonna be about 10 G's a month starting in year 2. We have to fix it a little bit in the first year. And it's gonna create easily over $750 to $1 million of personal net worth to that thing that you guys saw at the very beginning. The bigger the deals you do, the bigger impact it has. It's more about developing the skill set so you can do these deals. And then the last one, this is who I'm fascinated about. I just study what they do. That's a little gold nugget. A lot of these influencers and gurus love to talk, but if you watch what they do, and if you watch what institutions do as far as like the actual deals they do, how they finance them, how they raise the equity, who's the gunslinger in charge and what's their background, how they get there. I've studied a ridiculous amount of institutional firms and institutional investors. Watch what they do. I'm telling you, it will, like, success leaves clues. Anybody here that's created any type of success in their business in any form or manner knows that success leaves clues, and oftentimes it comes from watching what people do. These are funds, institutions, Blackstone, BlackRock, all of the institutional players, Greystar, Starwood, all of them. You guys can do whatever you want. Billions of dollars of profits are made. If you look up how much, I challenge you guys, look up how much Steve Schwarzman, the founder of Blackstone, personally made of net income last year. Just go and do it. I think I've read that he made over $1 billion of carried interest in 2024. $1 billion. Like, one individual guy. Very, very, very a big anomaly, but still, it's like $1 billion, one individual. Pretty crazy. Mega wealth, the big leagues of private equity real estate. This is where everything stems from. So you just have to understand, if you're brand new, just getting started, don't even care. Like, don't worry about it. You're playing with very, 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 very small breadcrumbs of a very large pie. How the world you make money. This is why people are here. You find a deal. I'm just making this up very, very, very simple. You find a deal that you buy for $1 million. Forget about how to finance it. Forget about how to come up with the down payment. The answer is people and information. But you find a deal, you renovate it, and you raise the rent. We put in another $250,000 of rehab, and then what's left over is a new stabilized value of $2 million. That's a general rule of thumb. You buy it for $1 million, you put $250,000 into it, it's worth $2 million because you increase the net operating income or the net income. We're gonna jump in the deal flow. I've already showed you guys the pipeline. This is what it actually takes for us to acquire a deal. We've looked at over 100 deals to land on one. This is probably obsessive. We've looked at a lot, but they haven't gotten all the way through. These are deals that hit our inbox and we see something wrong with it or something wrong with the location after we actually dig into it. And it's like, we don't like it, the location's terrible, it's too old, there's something wrong with the electrical, there's something wrong with the deferred maintenance, we just don't like it. So we pass on it. We've submitted 19 offers to land on one single deal. This is why the very first thing I ask anybody is like, are we submitting offers already? Yes or no? If no, let's get to work. If yes, let's figure out what we need to do differently to get closer on purchase or get more equity raised, or do, like, how do you get more deals? Where do we find these deals? For multifamily, again, you can go on market or you can go off market. There's obviously pros and cons to doing both. It is not anywhat similar to the single family world. The way that I look at it is you have online and then you have offline. Offline comes through broker relationships and direct to seller meetings. On market is two things. Crexi, this is a list. This is just for us in Tampa. Tampa, Orlando, Daytona, Ocala, the middle of the state of Florida. These brokers, some of them will sell stuff on Crexi.com, some of them will not. If you're dealing with like 100 unit deals, then you're not gonna likely see a lot of the properties for sale on Crexi. Small deals generally land on Crexi. So everybody can go, here, I'll put it in the chat. You guys can go create an account right now, this second, for free. You filter to multifamily right here. I don't want to look at RV parks and all that stuff. They give you different options. I only want to look at multifamily that has greater than 5 units. You can make money on like the small 2 to 4 unit deals. They just trade on comps and not NOI. I really like controlling the value based on NOI. That's super important for us. Our jobs is to mitigate risk in buying deals and selling deals. There's 8,200 results for sale across the entire country. I know it's a very given, or very broad range. We could go to Tampa, I could be selfish, or we could go to Dallas. Dallas is a cool market. I don't know what parts of DFW you want to be in and where you want to stay out of, but if we want to go see active deals that are for sale right this second, I go to multifamily, I filter to the units that I want to see, my buy box, and then I always filter for new listings. I want to see what's coming out, the newest. and then how old stuff has been listed. It's really important. 177 units, cool, we'll look at it. 25 units, this is Matthews. We know Matthews really well. This is 212, this is 67, this is 22, this is 11, this is 79. I hope you guys can see this. Like, all of this is for sale right this second. Somebody said San Antonio. I like DFW better than I like San Antonio for supply and demand reasons. Oversupply is a real issue there, but the demand is stupid. San Antonio is a little different. Here's the stuff right here for sale. New listings, 322 units, 9 units, 5 units, 12 units, 6 units. Like this right here, 5, 12, 6. This is great for most people to start with. You move up to the bigger stuff as you start to do deals. Baltimore, I don't want to go there. You guys get the point. There is nothing stopping you guys from going into your backyard, in your market, and filtering this. It's free. Anybody can go to Google and do this right this second. And looking at deals in your backyard. Let's go drive 2301 North Jefferson Street. Let's see what the location looks like. The owner of the building is deciding to sell his building. This is an 8 unit. I don't know what this is. This is 19. Like, these deals are available right this second. And nothing is stopping you from clicking the link. So you guys don't believe it until you actually see it. View the OM. I'm going to sign a confidentiality agreement. This is a formality of the business. Don't be concerned. If you're doing it from wholesalers, then read it. But on Crexi, it's like I've signed probably thousands, and Ian as well. I just signed the CA. Now I have the offering memorandum, and I'm like going to go look through the deal. They want 1.14 million for 8 units. Seems pretty expensive. When was it built? It was 1967. It's old, and it's also 5,300 feet. Right here, you see where this says 5,304 square feet, rentable square feet. Somebody do 5,300 divided by 8. What is the average unit size here at this building? If you're a fan of ones, small ones, it's okay. I don't like efficiencies or studios. Anything less than 400 square feet, I don't really love it because it attracts single people that are often $30,000, $40,000, $50,000 a year earners. Nothing wrong with it. Leave their units in terrible condition and also leave all the time. You're not going to have long-term residents. I look for 2 1s, 1 1s, 3 2s, townhomes. We own a bunch of townhomes. We own 28 in Ocala and 55 in Daytona. And the next deal we're buying is also in Ocala with townhomes. Townhomes attract really good quality tenants. I don't like this deal, pass. Let's look at Franklin Street. Franklin Street is awesome. I wish Mark was here. Maybe he is. Let's do it. Why not? 8 units. They want 1.65 million. They want 200 G's a unit for it. Built in 1920 and 1960. Where's the location at on the map? Let's go check it out. This is why you got to be a market specialist. You got to know locations like the back of your hand. This is a great location. Fantastic location. Downtown St. Pete. Like right next to like everything that's happening. So 200 grand a unit's like at first it's like fuck, it's pretty expensive for really old product. But then you realize it's downtown St. Pete, next to all the stuff happening, and this is all extremely historic stuff happening right here. Maybe I'll take a look at it, but it's super fucking old. What about the mechanical and electrical and plumbing, wiring? What kind is it? Copper? All this stuff matters if you're going to go in the super old stuff. Does that make sense? So we've gotten through 2 deals. I might pass this over to Ian. It looks like it's right next door to a building that was just built, which could be good. I want to see how much it cost to build this. That's really important. Let's do like one more. There's no reason you guys can't do the same. Let's keep going. I want to find one that we like want to go and underwrite and maybe call the broker. How about this? How about this? How about this? Another Franklin Street one. This is 16 units. For how much? 3.3, 200, still on the pricey end. I want to figure out what am I going to be in at and what am I going to be out at? What's the max value that we can push on this? You guys cool with me doing a live call to a broker right now? Let's see if he's a hustler. He's got a newborn, so I don't know if he's going to answer on a Saturday. Listen, Jason Daniels, he won't answer on a Saturday? You'll be surprised. You'll be surprised who answers on a Saturday. I don't think he's going to answer. I'm making a fool out of myself.
Your call has been forwarded to voicemail. The person
Always
you're
leave a
trying
message.
to reach is not available. At the tone, please record your message. When you have finished recording, you may hang up.
Yo, Mark, what's going on, man? I apologize and take full responsibility for calling you on a Saturday, but we're doing this boot camp, and I got 125 people here live right in front of me, and I wanted to call you so we could go through an 8-unit deal that you're selling. I'm going to assume you're enjoying your life with your kid. So enjoy the rest of your day. I'll talk to you soon. Bye. Okay, the reason I can leave that message is because I know Mark. I've tried to buy deals from Mark many times. As a new investor, it's not going to go like that. I just wanted to have some fun for the second. What you would do if you're brand new and you don't have the existing relationship with the broker is you're going to call him or send him an email. I don't really care which one you do. Send an email and say, hey, my name is Jose. I'm a new investor. I'm looking to potentially acquire your Hyde Park Arbors deal. This is a great location if it's truly in Hyde Park. I had a couple questions about it. I looked at the OM and everything, and I wanted to see if you had some time to answer my question. This is going back to Samuel. You got to know what you're talking about and know how to ask the questions with these people. You can call them, you look at the deal, you look at the OM. Let's see if there's any information. This is the flyer. Let's check it out. They're selling location. They're selling new upgrades. So there's nothing, it doesn't look like you can do anything to it. So this is probably not something I'm gonna be super interested in. I wanna figure out stuff that I can do stuff to and increase the rents and increase the value. I'm a value add investor. I'm looking to create value and make a ton of money. This is a great location. I don't think they have any pictures of the inside. So what I generally look for is, are the units already renovated or are they in classic condition? So like, let's go here. I don't know how much is on this page, right? This is the deal that we're buying. You guys ask, where did we find it? And I'll go through the off market really quick, but I just want to show you what I look for. These units, is that all I got? We're doing the pool. Oh my goodness, I'll show you guys everything. We're redoing this entire pool, closing this off, redoing the siding, doing cool clubhouse. I was looking for the inside of the units. I think I saw one picture. So like this, you guys can see this is granite countertop, black appliances, black splash, new cabinets. Looks kind of good. Looks like somebody renovated this unit. It does not look like a classic unit. You can see some of them have the LVP and they're all in decent condition. So we don't have to do a tremendous amount to it. We're adding an in-unit washer and dryer. I can go anywhere in the country right now because we have people across the entire freaking country and we can go do any deal. The higher quality the network is, the more probability you'll be able to pull off a deal becomes. So the deal comes out, the market speaks, it sits on the market for a long time. They get very few offers. It takes 9 months almost 10 months actually, for this thing to go from us knowing about it to us getting it under contract. Hang around the rim. Does everybody know what that means? Hang around the rim. You submit the offer. This is us submitting a lot of offers. We'll follow up with these brokers. Let's say the call for offers is Friday, and then we submit $7 million, and then the broker wants $9 million. Hey, everybody else is coming in at $8 million. Okay, great. Give it to them at 8. I can't pay more than 7. All right, cool. They went under contract, or they went into wanting to go under contract, and then we call them 2 weeks later and 4 weeks later, and we say, hey, what's going on with that deal? Is it under contract yet? Or is it going well? Is the equity going well? A lot of deals will go under contract, but the equity gets super, super, super dry, and that thing falls out of contract and people lose a bunch of money. Not good. Does that make sense? Deals come out, you look at it, you create relationships with the brokers, they control the majority of the market, and then you submit offers based on the price that you can pay. Now, to go through the off-market stuff, this is CoStar. This is a paid platform. So this is what they say is on market as far as like the quantity and everything, the real availability. Crexi misses a lot. They said 8,200 properties were sale. If you look at this, it says 12,771 are for sale right this second. So it picks up a ton of additional. It is paid unless you're inside of our inner circle community. I think it's $1,000 a month that we pay for this, and all of our people can submit requests inside of our platform to Ian, and then you just get all the stuff that you need. So for off market, we can pull a report. This is all the stuff that's for sale right now. I'm just gonna go back to Tampa because it's our home base. We're used to it. These are all the deals I can look at. Same thing that I'm doing on Crexi. It's a little bit more volume because this is like the mom and pop broker that listed on CoStar or LoopNet, but not Crexi. So you have a ton of more small stuff. That's generally what pops. So this is the all market. and then I can pull a report and go get all of the information for every property record and the owner of it and pull the owner's number. We have plenty of wholesalers inside of our community that do this. They join, they get the list, and then they go out and they call. This is real, true, direct-to-seller stuff. A lot higher probability of getting deals if they're small, off-market. If you're trying to go and do big stuff, the brokers control it. If you're small, you're not going to be as sophisticated as the people that are big, which is completely okay, because obviously you're somewhat successful to own this piece of real estate itself. It might be passed down, legacy, mom and pop, and they've been doing it the entire time. And then whenever you go into the big stuff, it's private equity guys, real estate people that are syndicators that know how the game works, and they're always going to take it to the broker to get the highest and best offer, or they might not want to go public with why they're selling it, so they move it off market. Does that make sense for everybody? The off market approach, if you're going to go direct to seller, you can do CoStar, you can join our stuff, or you can do it the hard way, which is like reverse engineering and searching on Sunbiz and like going in free people search. That's fun. I think if you're going to do off-market, seller financed, low money down stuff, you go to Facebook, you join our free community, and you say, or anybody else's. I was just looking at some. I don't know what else exists out there. You go to Facebook. There's 70,000 people in this group, 37 new posts today, 70,000 people total, and it was created 9 years ago. So what I'm going to do, if I'm a smart investor, is one, I'm going to learn so I can know what I'm actually talking about. Two, I'm going to have a network of people that I can actually close deals with, people with money, people with experience, people with hunger. Generally, that's a good creation. And then I'm going to go into this group and I'm going to post, my name is Gabe Bowling. I am an active real estate investor looking for off-market multifamily opportunities between 10 and 30 unit deals. I am the end buyer and I have the equity ready to invest into it. I have partners. You are not a wholesaler, you're not a middleman, you're not a fee person, you are the owner, you're the end buyer. That's how you have to present yourself, but you actually have to be able to back it up. That's why it's like impossible to do deals with nobody. So off market, wholesalers, realtors, people that are in the smaller world that might come across an opportunity and they know that you are an end buyer. That's the most important piece. You have to be very intentional. I'm an end buyer. I'm looking to invest. I'm not a wholesaler. I can buy the deal. I'm owner. Nobody wants to be the wholesaler in the middle, at least in the league that we play. If you want to go the other way, you can pull a list, call directly. I don't care what you do. It's up to the student and what they do. We have people that buy hundreds of units, and then we have people that will do one unit or one deal for 5 units, and they're super happy. Does this make sense for deal flow? I know we went through it relatively quick. The key that you probably should have taken is be able to call the broker and have a regular relationship with them. Hey, what's going on? I saw you listed this 8 unit deal. You know me, I know you. Can you just tell me the story? That's what happens on a real basis. To give you context, our buy box is around 100 units or more. This is 68. It looks good. It's right across the street from our 28 unit building. This will give us 96 units within a 2-mile radius. I like it. And actually here. So here's the deal. This is the offering memorandum. Our business plan and why we decided to buy this is we want to add scale to the portfolio. So we've been looking to acquire assets in Ocala. We own 28 units. That's the biggest problem that we have. It's only 28 units. And from a management standpoint, it starts to get fun when you have 100 units. The reason that we like this deal is it's 2 minutes away from our other one. It gives us 100, and the value add plan is kind of a to the T what we just did at our 28 unit deal with a little bit less work on the inside and more work on the outside. So what I mean by that is if you look at the outside the pool right here, this looks like garbage. It is not nice and it does not attract really good quality, high paying tenants. We're trying to buy maybe a C+ asset and moving it to attract a B class tenant. Does everybody understand what I mean when I say that? The exterior part of this plan, giving you context around it, is it's an absentee owner based out of New Jersey, and they've been to the property 2 times in person. And they self-manage it from New Jersey with local realtors and maintenance people that are in Ocala. And so they bought it off market, direct to seller, where the rents were super low, and then they didn't do anything to it, and they increased the rents $200. That's exactly what they did to the last building with the same quality C tenants in it. And then we reprofiled our 28. We did a nice renovation, and we got B class tenants at a $350 increase. On this building, we have to do the exterior, meaning this pool area. As soon as I get my packet, you'll see what I mean. A dog park, a pavilion, a garden, pretty cool stuff, and relatively low cost. The biggest project itself will be this pool. And then on the inside of the units, there is no in-unit washer and dryer. That alone, it's a little secret sauce thing. I'm telling you guys right now, if you can find a townhome property that doesn't have in-unit washer and dryers, it's a good indicator, because you can put in-unit washer and dryers and make the profile of the tenant so much better, and you can get 50 to $100 for just doing the washer and dryer. I believe it's going to be 43 or 44 by the time that we close. The units of the 68 are renovated. You know, some are pick and go, some have tile flooring, some have the LVP, but all granite countertop, black appliances, either brown cabinetry, don't know why, or the white cabinetry that we saw right here. 44 out of 68 will be completed by the time we close. I believe it's 41 right now, but they have 3 that they're renovating during the contract. We are going to put the in-unit washer and dryer in. That is what we're gonna do to this unit. And then for the classic units, they don't have any freaking pictures. Of course, just FYI, this is the broker's packet. They don't have any classic in the broker's packet, because the broker's packet's always gonna be the nicest and the newest and the prettiest. But here's what we sent to the actual investors. My track record, my partners, this little pool thing right here, this is the biggest piece that we're trying to sell to the investors and sell as the business plan. There's not a tremendous amount that needs to happen on the inside. We're still going to raise the money to have it just in case we need it. And we are planning to do a cash out refi in year 3. That is our business plan. We want to buy the asset. We want to fix it. So this is what a classic unit looks like. And we're going to make it look a little bit nicer and put the washer and dryer. It's an all-in-one, at least in the ones. And then for the renovated, we're gonna keep them the exact same and put in washer and dryer. For the outside, I don't know if you guys can see it, dog park, pool renovation, clubhouse, leasing office, pavilion, charcoal grill. And then this is what we did to our last deal. We bought it with classic units in place, butcher top counters, white appliances, ugly cabinets. We put in stainless steel, granite, undermount sink, new appliances, and just painted the cabinets, and it's fine. And then we painted the building. This is our other asset 2 minutes away. We've already proven a $350 increase on it. So our level of conviction behind our business plan is pretty high. For the outside, we're getting rid of this kiddie pool. We're going to put a nice little pergola sitting area, maybe some games, and we're going to we're closing these bathrooms off, taking this awning down, redoing the siding. We're going to put a cool little mural, and then there's a pretty big clubhouse back here that we're going to do really nice. Put a pool table, ping pong, seating area, TV, all the fun stuff. So we're making it look like and feel like a professionally managed building that has recently been renovated from the exterior, and then leaving the majority of the inside the way it is, renovating the units that we have to, that are in terrible condition. And if we do it, this is Raising Capital 101. Our goal for everybody that invests 100 grand, and we are already done. Like, you can't invest with me unless I've already said that you're in the deal and you came from our community. This is not available. You cannot invest. We raised $4.5 million of commitments in 10 days. So if you invested 100 grand as a passive investor, you'll get 6 grand year 1, or a 6% cash flow return, 6.5 year 2, and then 70 grand back or more on the refi, tax-free. You remain in the deal at the exact same ownership percentage, and you continue to get the cash flow from that point on until we sell. So you invest 100, you get back 200 over the entire hold period, but you get 70 to 100% of your cash back tax-free in the refi in year 3, and then you continue to get the income with having very little, if any, capital in the deal. Now we're gonna go into the actual process, the acquisition piece of it. We underwrote it, so the deal came out on Crexi. We knew about it. Jason called up. We look at it, we know it like the back of our hand. We hang around the rim for 10 months, and then we go under contract. What is the tangible things that happen between finding it and going under contract? Whenever we underwrite a deal, we separate it out where we put all of the seller's information right here, And then we have what's called takeover column. All we're looking at, I don't care what's on the seller's T12, to be honest. I care because I want to understand the history of the property. It doesn't go into what amount I'm going to pay for it. I'm going to pull this off of the rent roll, and then I'm going to underwrite it as if I'm a new owner. So new owner income and then new owner expenses. What do I mean by this? Let's simplify it. Here's the rent roll. This is the information that you get off the rent roll. The unit breakout, how many units are classic that are 1-1s, how many units are renovated that are 1-1s, how many are classic that are 2-1s, how many are renovated that are 2-1s. Same thing with the townhomes, same thing with 3-2s. Does that make sense? And why we break it out? It's super important. You can't just take an average. You have to break it out, because are you going to re-renovate the renovated units? Probably not. So you want to account for it accurately. And if the renovated units are already maxed out on rent, then you're not going to increase them by $200. You're only going to increase the classic ones by $200. Hopefully that makes sense. So we get the average in-place rent across the entire board. If you guys wanted to do your back of the napkin math, which we can do on the whiteboard, I'm happy to do it. The average in-place rent is $1,350 or $1,344. That will help me dictate how much income is at the property today. Then we have another column called the seller's proven market. This is what I call loss to lease. If your leases on average are $1,350, and then the most recent leases that you're signing in the last 3 months are at $1,450, that would tell me as a new investor that there's $100 of what's called loss to lease, meaning I don't have to do anything to the property. All I have to do is let the old leases expire and either renew them at an increased amount, or the demand is there where if that person leaves, then I can fill the unit without doing anything to it at that increased amount. So the way that I do this is I look at the today's income. So these numbers are coming off the rent roll, and then I'm subtracting 5% of a vacancy loss. We'll run it at 95%. So I'm losing vacancy loss. And then I have other income items. In Florida, we can charge almost anything for other income for a random fee. You guys know it if you live here. Application fees, damages. A tenant leaves a property bad and then you bill them back for it and then they pay. That's what damages is. Late charge fees. People are late paying their rent. Laundry income, miscellaneous income. I want to know what that is. Pet rent if they have anything, and then utilities. That is what other income is made up of. We have the rental income that comes from our rent roll, and then we have other income that comes from the T12. Now everything, you guys see this black line, I'll go into 200. This black line is the difference between reality and La La Land. La La Land is made up. We go into the future. You are in control of what you project in the future. So whenever you move forward, you can start messing around with a business plan. But if it's not there already on the rent roll or on the T12, do not pay for it. It's pointless. That is where value is being created. So like for this property, I know that we'll end up getting some deposits and hold income because these people will leave it in bad condition, will hold their deposits. That's okay. I know it will happen. I'm 100% certain on it. We're raising a bunch of money. This is interest income. We're raising $1.5 million extra beyond what we need to close the deal for the CapEx. Not all of that is going to be spent in the first or second year, hopefully not even spent in general. That will sit in a high yield savings account, earning 30 to 40 grand a year. We're projecting more income. Does that make sense on why or how I'm getting there? Very other small things right here going on. Other income. This is probably not the best way to start with the underwriting. This is like the most advanced stuff. I just want to kill you guys and do it in a respectful way and not go till 4 p.m. today because we're coming back tomorrow. These are the expenses associated with running an apartment building. Contract services, landscaping, and the pool contract is in this one item. Pest control, trash removal. Here's what you guys don't account for. They don't spend any money on advertising. We do. I'm not technically not paying for it. I'm bending over a smidge bit to get the deal done. We are going to end up spending $1,000 a month on advertising to fill this building up. Like, this number shouldn't be zero if you're going to be advertising. You want to put a number there if you're actually going to be spending it. Insurance, we have a broker for this. Happy to make an introduction if you're in the state of Florida. Get an insurance broker. As you're getting into the business, who can I develop relationships with? Get an insurance broker that can give you a quote on what insurance might cost. PM fees, and then payroll. I've been to Ocala maybe 3 or 4 times in the last year of owning a deal. I don't need to go there. We operate the building out of our office. And then Noah, my construction partner, is there 3 to 4 times a week. We have a third-party management company that will be managing both the 28 and the 68 units. So this is their portion of payroll and management fees to manage the property. That's really important. Like, how do I manage it? You don't need to manage it. You need to underwrite it and not pay for it, account for it. Taxes, utilities, professional fees. That's all we'll go through. The most important number I care about is the takeover NOI. Now, I know I just confused a lot of people with going through this. I'm going to simplify it. Just remember this number of $680,000. This is the only number that I really care about. You guys can hold on to $680,000 of NOI. I'm going to do it on the whiteboard now. The goal of this is for you to be able to end today's call and go to Crexi and find a deal and be able to pull the most important information out of it to then do this back-of-the-napkin underwriting. I'm not expecting you to know this spreadsheet inside and out. It's taken a very long time to understand this thing. But that is the level of detail that you need to have if you're going to be doing multifamily deals. So what do I need to know to underwrite the deal? So we have 68 units. We have an average rent of $1,350. We have 95% full. That's our occupancy. And then there's plus 5% of other income. If you guys wanted to really simplify it, I just need you to understand why I'm doing this. If we're getting rid of 5% of this, and then we're adding 5% of that, you can almost skip this step and be okay with it. And just do the 1350 times 68 times 12, because it's going to almost cancel itself out. Now, this is total income, and then we have the expense ratio. This is totally dependent on where you live. If you live in Vegas or Phoenix, Arizona, the expense ratio is going to be 25 to 35%. The reason I know this is we have people there and we look at a lot of deals. And the reason that is because taxes and insurance barely freaking exist in those states. In the state of Florida, you're always going to be between 40 and 50%. 50 is on the higher end if there's not enough income in place. In this deal, I know for sure it's 40%. So I'm going to do 40% of this is all of the income. After we're done, this is the holy grail that I'm looking for. I just took you guys through it, but in the actual underwriting. This is the back of the napkin. What's the NOI? I don't even remember it. We're going to find out. And then back of the napkin. What's the NOI? We're going to do it really quick. 1350 times 68 times 12. I just want to make sure. 1.1 million times 95%, 1,050,000 plus 5%. 1.1 million of income. Somebody tell me what to do next. We take out our expenses. 40% minus 40%. I am lazy, or we could just do 60% of 1.1 million times 0.6. 660. Everybody get that number? Follow? 660K. This is a golden nugget that I'm about to show you. Take this number, 660, and divide it by 9.9 million. Somebody tell me what this is. If you guys are really smart multifamily investors, what math are we trying to solve for? If we're taking our NOI and we're dividing it by the purchase price that we're acquiring it at, you guys are awesome. Cap rate. Now, what is the actual cap rate? Just do the math. 660 divided by 10 million is 6.6%. And I'm not liking this whole 6.6 thing. So if you guys really wanted to do it, do 6.8. 6.8 divided by 10 million is a 6.8% cap rate. So we're doing a 5-year loan on this. If you guys track the treasuries, this is where money starts at the treasury or the Fed rate. This is 3.7%. Rule of thumb is add 2 to 2.5 points on top of this, and you will get your all-in interest rate. The cap rate that I'm acquiring it at, cap is 6.8%. The interest rate is 6. If your cap rate is greater than your interest rate, you have what's called positive leverage. If your cap rate is equal to your interest rate, you have neutral leverage. And if your cap rate is less than what your interest rate is, you have negative leverage. It's like green, yellow, red. If you are green, you have positive. If you are yellow, you have neutral, and if you are red, you have negative. What we just did, we solved for our NOI. We divided it by our purchase price to solve for our going in cap rate. It's almost a 7 cap, which is freaking insane for the state of Florida. Like most of Florida is trading in the 5s. Ocala is in the 6s. Ocala is not Tampa or, St. Pete, but we're almost in at a 7 cap. Really good pricing. This is a good thing. Now, a lot of people make mistakes with negative leverage. It's too much risk. If it's your first deal, don't do it unless it's an adult flip. For big deals, this is a no-no. I can't do negative. I need neutral or positive. So that is a really big indicator. Any smart real estate investor is going to look at your leverage, how much you have, what the interest rate is, and what the going in cap rate is, and what the going out cap rate is.
You already answered the question that I had about the acquisition fee.
Yeah.
When you're getting started, of course, you have network with a couple people that do trust you, and they're open to maybe coming up with 100,000, 200,000 to put in the pot with you
if they like you too.
If they like you, right? Yeah.
Most people start with 50.
I've come across people where they want to invest and they're very hands-on as well and analytical, and they don't know anything about investing in multifamily, but they want to invest with you even though you're the general partner trying to orchestrate the whole thing.
Yeah.
They still want 50-50 of everything. They want to, but my thing is, if I approach these people, I know for a fact that they're going to object to the acquisition fee. So my question was how to approach it and explain to them that it's part of the transaction and why the acquisition fee is put in there.
All of the net returns that I'm projecting and telling you are net of all fees, promotes, profit splits, and everything. If you like the deal for the net returns, you should invest. If not, go get a new investor or go get new investors. That's the honest truth. I've seen partnerships blow up because somebody's raised money from the wrong type of investor and they want to be super, super, super controlling. Business itself is supply and demand based. And so if you have super sophisticated investors that are used to investing in Wall Street and big institutional funds and they want to back you at the beginning, it's going to be a much different experience than raising capital from the everyday person that's just investing 50 or 100 or 200, or maybe they're moving out of single family homes and they're actively doing it. They don't want to actively be involved anymore. They don't really care. The only thing that matters is how much money lands in their bank account, when it lands, and when it's paid. Does that make sense?
Yeah.
So go get new investors or manage the expectations and say, listen, I work freaking really hard. It took me 10 months to put this deal together, following up with the broker for a very long period of time, working the relationship, submitting multiple offers, going there in person. It's pretty tough to get these deals under contract. And for finding it and bringing it to you and making it completely passive, we do 1.5% acquisition fee. All of the returns are net of all fees and profit splits. Do you like the deal? And if you can't get over the fee, then go do it yourself. And I wish you the best of luck.
Excellent. Well said.
We have 3 $1 million investors on this individual transaction. The rest of the money filled up extremely fast, and people are like asking me everything, nuances about operating agreements and underwriting. Like, dude, just if you don't trust me, don't invest. Period. The deal can be as great as fucking possible, but if you don't trust me, it's not even worth getting this thing started. Hopefully that helps.
Yes, it did.
Yeah, cool. And thanks for coming up. Where did you learn all this from? I thought I knew a lot when I was working at Grant's office. The simple answer is I've submitted hundreds of offers. I do one-on-one underwriting reviews and deal reviews with hundreds of people inside of our community. Over the last 3 years, we've done 300 plus hours recorded trainings on the inside of the inner circle. It's all inside of our vault right now. So just doing is the best way to learn. And over a long enough period of time, it becomes more and more and more natural. And then you start to feel pretty good about it. What's the going in cap rate for the area? Sixes for Ocala. What determines 5-year versus 10-year? Yield it's not the absolute interest rate that matters the most. It is the overall terms of the deal. So prepayment penalty, is it yield maintenance or is it a step down? Is it recourse or non-recourse? That's a really big thing when you have assets that lenders can go after for you. I don't want to do recourse deals. I'll do non-recourse every single day of the week. And how much leverage can we get opposed to the interest rate? I'd get a better interest rate if I got less leverage, but I want more leverage, so I'll pay extra in rate. Interest only versus non-interest only, it makes a really big impact on your monthly payment. So it's taking all of those variables and putting them together and then figuring out which one fits the best for your business plan that you're trying to accomplish at that building. So like a lot of small deals will end up being bridge debt, private money lenders, whatever, like all the short-term stuff, because there's just not enough income in place. And the big deals, you have long-term 5-year fixed loans. We figured out our business plan was to increase the rents by $300. We have a very, very, very high level of conviction that we can achieve these rents. This is our target. To get there, we're investing about $1.3 million total of equity, and this is everything. This is a lot more than we actually need. I way oversubscribed the deal, and we'll have hundreds of thousands of dollars that we didn't actually need to use, and we're just de-risking the deal. So we're injecting probably $1 million of this into the property in the first 2 years, a lot of the pool area, the inside of the units, and stuff like that. Our business plan is to take the NOI that we're acquiring from 680 to a target of 950 by the end of year 2, start of year 3. That is our internal operating, like, what the hell are we doing? Where are we at? We bought 680 and we're trying to take our NOI to 950. That is how we rock and roll. That's what determines how much value there is at the property and what you can pay for it. We're under contract at 9.9. We're gonna end up refinancing in 3 years. Our target appraisal is $15 to $16 million and 5.5% for an interest rate. That is what we're guessing. If rates go down, then we'll pull out more. If rates stay here, then we'll pull out less. There is no way here. I'm probably the only person online that will tell you this, but you will never, ever, 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 ever 100% be accurate on your underwriting. You're always going to be wrong on the income, on the other income, on the expenses, on your NOIs, on your values, on everything. You're never going to be 100% accurate on everything. So if you're going to be wrong, you may as well be wrong in the bad way, or in the good way, where I tell you that we pull out 70% and we actually pull out 100% of the cap. That's awesome. And the other way, it's not fun. So we determine that we like these returns. Our investors like our returns. This is post profit splits, 70-30, post acquisition fees and everything, just so you can see it. This is how it looks like. 9.9 a purchase price, 200 of closing, 150 of syndication fees, 200 of working capital. This includes the reserves, and then another 1.3 for the project. We get a $7.2 million loan. The GPs, I have two $1 million 1031s that I'm allowing into the GP pool so we can accommodate for it. We're raising $4.6 million total, and then this is how it would work on the refi. So we project forward, we put all this into a fancy sheet, and we understand the deal completely inside and out. It ends with this. This is an LOI on 6/19/2025. 9.9 million, no financing contingency. Gotta have some cojones to play this game. Deposit to escrow, 100 grand, 25's hard, non-refundable day one. I was comfortable making this exchange because the seller wanted to make sure I wasn't going to retrade him all the way down, because a lot of people do that today. So I was like, okay, I'll put skin in the game. I like it. I'll buy it. I don't care to put 25 hard. This 100 grand goes hard and non-refundable after the end of DD, which is in 6 days. So we got some work to do. Closing by 8/29. It's actually 9/8. Blah, blah, blah. Seller signed, me signed. The very first thing that happens is I send an email over to our attorney and I say, here's the LOI that was accepted. Please draft a PSA. So here's another golden nugget. If you guys stay this long, you guys obviously enjoyed it. Make sure if you're going to do a deal, when you submit the LOI, make sure it says that you get to be in charge of coming up with the draft of the PSA. Where that says is contract. This letter of intent, blah, 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 shall be prepared by the purchaser. We started the PSA. We're taking everything from the LOI. LOI is not legally binding. We go into a PSA. They say, here's the deal. Here's how much you're paying. Here's the earnest. Here's everything. And then when you guys sign, you have a signed agreement and you've signed and they've signed. Then, and only then, are you legally bound to the transaction. So it's not real until you actually get the PSA signed. So don't go posting all over the place that you have a deal whenever the LOI is accepted, just when you have the PSA done. This is what actually happens whenever you try to get a loan. They send you a big, big, big checklist of everything that they need for the legal side, everything that they need for the guarantors, everything like credit off, key questionnaire, personal financial statement, schedule of real estate, last 3 months of bank statements, blah, 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 blah. More property stuff. I'm just showing. Again, I like to show, don't tell. Another one is insurance. So it's a bunch of people that all need their checklist checked to get the loan. Part of it's insurance. They send a bunch of emails with a bunch of stuff that looks like this. Our insurance broker is on it. This is why we pay him money. So that way he takes care of all of this. Lender due diligence. That's this right here. They're getting a checklist, blah, 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 so I can get my $7.2 million loan. This is how we structure the deals. This is why I say there's no right or wrong. We call it TDR Community Fund 2. This is our attorney. They send me a questionnaire and they say, how do you want to structure the deal? Minimum of 50 grand. That's the entity name, property name, because it's a syndication. Everything is specific to this one single deal. 70-30 profit split, no preferred rate of return. That's a whole nother call. 70-30, 1.5% acquisition fee, 1.5% asset management, 1% refi, 1% dispo, no construction management fee. That's the stuff that matters the most. And it's like super important that you have it in your underwriting so all this stuff matches. I've seen people do fees without it being in their docs, and that is illegal. We raised a bunch of money from people, and we have an investor portal, and we send everybody out emails and stuff. We do a call. We did one individual call on this with the private community, had 100 people there, and we raised all the equity from it. So they go to their investor portal. This is the platform. They go to new offerings. You see the deal, the pictures, the packet, all of the documents that we have uploaded here. If they want to, they can go through it, and then they click invest. And so this is like where everything is set up. All of their tax forms go right here. Their docs, their transactions, contact, the bank accounts, all of it is in one spot. This is really important if you're going to be a partner with somebody. You want to make it super easy and not like skeptical. So I'm a big believer in investor portals if you're going to raise capital. We submitted the offer. We found the deal. We liked it at this price. We submitted it. They didn't like it at first, so they took it out to the market. They brought it back, and we are under contract. We submitted the LOI. They signed. We have a signed PSA, we're executed, we're in due diligence, and now due diligence is going to end. We're going through our lending portion. All of the money is already committed. We have over $1 million in the bank right this second for the deal. We have another $1 million coming in this week, and then the other two 1031s are almost already done. So by the end of next week, no later than August 15th, we'll have all $4.5 million accounted for, and we will close on September 8th if Fannie can close on time.
So I was just wondering, obviously you look at a potential apartment deal that you like, and whatever list price or price they're asking, you do your due diligence, you run your numbers, gross income, NOI, whatever, and you come, how do you know, based on what their number is listed for, what they're asking for, how do you know what number to go in at? And everything checks out as far as your numbers. How do you know what price to go in at offering first,
Yeah, I love it. Thanks for asking the question. I do care about what price they want, because I do know that they've already agreed at this certain price. So I know that the seller has agreed with the broker at this price. If they can transact at this number, we can do a deal. That's kind of important. It was a lot more important during 21 and 22, or 2020, 21, and 22. It's a complete buyer's market today. It is not a seller's market. I'm telling you, it's the worst time in the world to sell if you're a seller. It is buyer's market because everybody knows interest rates are high, values are low, people are in trouble, you have distress going on, most likely, which is why I always ask, what is the reason they're selling? So why are they selling the building? Do they have a loan coming up? The blah, 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 blah. There's got to be some level of motivation, because if there's not, then I'm probably going to be too far off of their number for a deal to happen. But we'll find out. But we've underwritten hundreds of deals where we've submitted and we know they don't have to sell. We just literally go through the motion just to do it. But the only ones that actually get close enough are the ones that have to sell. So where I'm going with this is, I don't care today on the acquisition. I care about how much profit there is on the deal, how much the investors can make, and how much we can make. That's why we're here. We're not like, we can be buddies and friends and stuff, but like, let's do deals together. So I look at returns. I'm a risk adjusted return investor. My only job is to mitigate risk and make sure we can perform on the upside or the business plan and do well for the investors. So yes, they wanted $11.5 million. It doesn't mean I have to make sense of the deal at $11.5 million. I want to make sense of the deal based on what returns I'm going for, how much upside there is on the building, what's my future NOI. Like if you guys are familiar with single family home flipping, just look at the ARV and you can back into what price you can pay minus the cost of rehab. That's simple enough to understand. If you can buy a home for a 50 grand, put a 50 into it, and then you can sell it for 200 and you make 100,000, that's like somewhat of a good deal, right? It's kind of the same thing here, except my profit, the number that I look at, is the returns that I'm projecting to hit from the investors we're partnering with on the deal.
And that based on your numbers, that price, is that what you go in first, or do you go in a little bit less so that you can kind of do that point?
I went in at 9.5, which is just I'm super happy with this. Like if we get it at 9.5, fuck, I'm happy. What number can I stretch up to? 10. I can still do this deal at 10. We're under. We got it awarded at 9.9. I hope to close at 9.8. 9.75, somewhere in there.
Yes, it does. So, of course, there's a certain amount of money, whatever percentage you're looking for you and the investors. You don't want to spread yourself too thin going in as far as making your initial offer.
Yeah, well, no, I don't care. It depends. Like, hey, dude, I'm coming in like $3 million off, and it's a $10 million deal. It's like 30%. I don't want to be offensive, but I can justify why I'm coming in $3 million off. My return metrics are blank, blank, and blank. And based on the $10 million offer, I can't get even close. Like, who is buying this deal? Can I ask you, is it a 1031 buyer? Is it somebody else? Like, I can't get to these returns. And generally, most syndicators are relatively in the same return spectrum. Is it too offensive to submit the offer? Oh, no. I know we brought it out to the market overpriced. We're just encouraging everybody to submit offers and we'll see what the market says. Fucking, that's a nice way to say I overpriced it and we just want to see what the market speaks at. You should submit at whatever number you came up with.
Gotcha.
Yeah, you can do it. I wouldn't just submit stuff, like talk to the broker. Don't submit offers without talking to them because they need to know who you are. They have to sell you to the owner of the building. But really good question. We submit offers on deals all the time. Like I can't tell you the last time that we have submitted an offer at their guidance price. It's kind of it's not happening today because brokers don't, especially on the smaller deals, because you can find the right buyer and sell it to a 1031 guy opposed to a syndicator. Syndicators are going to be a lot tougher on the price that they'll pay. On the big stuff, it doesn't happen. Small stuff, it does. What's up, Donnie?
All right. So apologize for that. I got the family here in California vacation, but I didn't want to miss this.
Wow.
You mentioned earlier that the name would be based off the property address for syndication. Is there pros and cons to that?
What was the question? Your name? The name?
The name, yeah. You said you was going to base it on the property address for syndication.
No, well, syndications...
Should you do that for syndication?
Yeah, syndications are specific assets. They have addresses. It's the deal itself. A fund where you go out and you raise money blindly without having the deal identified is when it's blind. You're just investing with the operator and you trust that they're going to pick good deals. A syndication is one deal, one address, one set of numbers, one title, one roof, one everything. That's what a syndication is.
You let your fund actually dictate where the asset is and keep the fund for like other.
I don't have a fund. You got to have track record to have a fund, in my personal opinion. But generally, your fund is going to have criteria, locations, asset types, sizes, type of leverage that you're going to take on. So we'll outline a very specific, or it could be as bland as possible. Like if you go read grants documents, it will literally say you can invest into anything in grants and control. Most funds have targeted assets that they go into with targeted locations that they go into. They just don't have the specific address yet. Syndications is not any, it's just one deal. I go out, I find the deal first, and then I bring it to the investors. And then the fund is I find the investors first and then go find the deals later. It is much better. It gives you a lot more strength as a buyer. I've just seen so many people pay attorneys 20 grand to set up a fund and they've never done a deal before. And then investors like laugh at you for trying to be a fund manager with no experience. It's just, I'd laugh at you. And to be honest with you, this is my 5th deal. The scarcity behind the equity going away is a very real thing. From a fundraising side, now we're going into today. Every deal I've done is always oversubscribed in the first 30 days. So if you want to be in the next one, you have to be on the waiting list and you have to be in the know about it. What does that do? It creates this scarcity. It's like, okay, cool. I'm only going to do 1 to 2 deals a year. And when I call you, it's a home run. I don't do shitty deals. I don't need to. I don't absolutely need the fees. The fees are nice, but we have the deal room. Deal room's cool. Deal room covers bills, pays for payroll. Awesome. So I'm a coward when it comes to investing. I want to do kick-ass deals and kick-ass deals only. Cool. All right, I'm going to do 1 deal. Let's go. I just called you. I have the deal. Schwam. $4.5 million in 10 days. So I like it. Now we will go into a fund model when we can hire the appropriate investor relations teams, because I can't take phone calls. I don't do phone calls anymore unless it's investors for specific deals. For investor relations that create relationships and investing into a blind fund, we're going to build out a team, just like I was a part of an IR team at Grant's office. And that comes with deals, asset management fees, reoccurring income, and a little bit of a track record. So I think we'll do a fund either maybe late this year, I have no idea, or most likely next year at some point. If you guys spent an entire 3 hours with us, and you're looking to do stuff with us further, then click the link in the chat and go check out our inner circle. This is I do this every single week on Tuesdays at 12, 7, and 7:30. It's often. And then we do one-on-ones all the time. Go ahead, Ann.
Just brief questions. The first one is, do you ever get any pushback on requiring you to do the PSA for the offer?
Yeah, of course. Yeah, people are smart. They're like, no, you ain't getting that. Good, thanks for asking, but you're not getting it. It's just who are you dealing with on the sell side, and what's their level of sophistication and how many deals have they done? But if you go in, if they're not used to it and they've never done a deal before, it's not common that they're selling a bunch of stuff, then just go in and ask for it. The worst thing that happens is they say, we already have one, blah, 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 blah. It's like, all right, cool. Well, at least I tried.
Okay. And then the second question is, I've done it both ways before, but do you recommend going straight to the listing broker to make your offer, or do you use your own broker? You're in a different stratosphere with what you do, but for a smaller deal. Do you use your own broker, or do you use Google Direct?
One broker controls the entire transaction. That's the sell side. There is no, unless you just want to pay more money for whatever reason, there is no buyer agent for multifamily stuff. Maybe you run into it with the 5s and the 7s and the 10s and the 12s, but generally speaking, it's an exclusive listing agreement that the broker has, and the broker has hundreds of thousands of emails and phone numbers that he's going to blast it out to find the buyer. Now, yes, they will work with buyer's agents, but they don't want to at all because they'd rather keep the entire commission to themselves, and they have no problem finding a buyer. If you're not comfortable with it, that's why you should join something like the Inner Circle so you can actually get help. That is the reason that we exist.
I've done it both ways, but I didn't know if you had any preference.
Yeah, no, I just don't. I'm going to pay a bunch of people to do a bunch of things during the transaction if I can. And most of the time, I don't want a buyer's representation because they can't represent me the way that you should. You are your own representation in this space.
I actually have a question. Dialing it back a couple of steps. I know a lot of you are already a little in this area, but I'm just starting out.
Yep.
And I have vacation next week. So I'm wondering, for someone who's just starting out, how do I take my free time for the next week, building my repertoire, with brokers, even in my area? How do I email them?
Where are you based out of?
If I get a response, I'm in Cape Cod, Massachusetts.
Okay, cool. We got people up there. Is that where you want to do deals? Locally in your backyard?
I'm going to take your recommendation for your classes and start in my backyard, but I am looking in other areas as well. I've been talking a lot with ChatGPT.
Yeah, if you're brand new, you need people. I just forget about, well, you need to learn, number one. You should know how to determine how much profit there is on the property after looking at takeover NOI and future NOI, and then what you sell the building for, and after you pay off the loan, how much money is left over. You should understand that, like the basic stuff. And if you don't have a tremendous amount of liquidity, you're brand new, you're just getting started, you will end up being the deal finder, or like the person that's going out and doing the sweat equity and providing value to people that have money. It's like, these coaching programs suck because they only target people with no money. And then there's no investors in the group that actually have money to do deals with. And so we have everybody. It's like the people with money, the people with experience, and then the new people. If you're new, go figure out how you can provide value. Most of the time that's by sourcing an opportunity and making it easy for somebody with experience and money to actually do a deal, and get in with them and let them bring you in as a small partner, and you basically get a little bit of a fee. I'll pay you 25 to 50 grand up front, and then you can have some equity in the back, and you get to learn the operations. You get to learn and see how the business is actually done, and then you develop some conviction, some confidence, and then you try to go out and do a deal by yourself and put everything together. It's exactly how I started. I found a deal. I raised some money. That was like the big thing, but I found the deal. I had somebody who wanted to help me. That's a really important thing. We have to like you to want to change your life, because this business can and will change your life. But if you can't currently sit at the table and you don't bring that value today, be willing to serve the table and get close enough to the people that are there to get your seat eventually. I served the table for the first year working at Marcus & Millichap for free. I didn't make a single dollar. Slaving away working at Grant's office, being well paid, but working 12 to 14 hours a day, every day for fucking 3 years. That sucks. And then the first year was extremely painful. The second year was extremely painful. And the third year starts to get a little bit easier. So we're like 7 years in, almost 8 years in, and we're just now starting to feel the impact from the seeds that we planted a long time ago. Does that make sense?
Absolutely.
This is definitely not a get-rich-quick business. It's a get-wealthy for sure over a long period of time. You look young, I'm guessing. Sam, right? How old are you?
24.
24. Dude, you have nothing to lose. Be willing to give up your 20s to live the best life and on after 30. That's what Gary Vee said, and my wife and I listened when we were 20. I turn 28 next month, and my wife is 28 today. We've been on this journey for like 8 years. It's crazy. But I'm telling you, if you you have a good mentality by showing up on these calls and you want to do it, like go be super hungry and provide a lot of value for people that have a little bit more experience. Does that make sense?
Absolutely.
Good, man. Thank you for showing up. Man, that was freaking insane. Over 3 hours of jam-packed information. I feel like I didn't go through anything. I hope you guys were able to take away a ton of value. We're taking the break between day 1 and day 2. We're going to be back with raising capital and actually structuring partnerships on how to make money and change your life in multifamily. If you guys are still here listening to this video after going through the last 3 hours of day 1, I'm guessing that you found a tremendous amount of value. All I ask for is make sure you hit the like button, comment below what the biggest takeaway was, and more importantly, make sure you're subscribed to the channel so you don't miss anything, and I will see you in day 2.